Okay, thank you for tuning in. Today is Wednesday, November the 5th, a quarter of 10 a.m. Pacific time. And in this video, I'm going to discuss a trade setup I did earlier today. All right, in the SPOOs, we have a 0 DTE going. And by the way, current prices, 68.26, market's up 55 handles. And this morning, we were quite a bit lower. And the morning low was 67.63 and change. And shortly after the open, what I started with was a put vertical. And the specifics of the trade are the following. I sold the 67.65, bought the 67.60. That was done for a credit of $2. And the timestamp on that is 6:41 a.m. Less than 10 minutes later, I bought a put spread. And what I did was I bought the 67.60, sold the 67 double, and that was done for $1.10. So I have a $2 credit. I have a $1.10 debit for a total credit of 90 cents. And note that this is now a short butterfly, which I have over here. I'm hovering over the position on the options chain. So you can see that I sold a 65, I bought two 60s, and I bought a double, total credit of $90. Now the risk graph on that is the following. You have a short butterfly. Total risk is down at the 60 strike, which is the shared strike. At that point, if the market closed there for this trade setup, I would lose $410. So that would be a $500 loss on the spread minus the $90 credit I received for a total loss of $410, pinning the tail on the donkey. Not so good. Anywhere above 67.65, I keep the credit of 90. Anywhere below 67 double, I keep the credit of 90. But from this point on, I decided to add on another spread to the trade, and that was this. I bought another put spread, and the strikes were 95 and 90. So I ended up buying this for 55 cents, leaving me with a total credit of $35 on the trade. So now the way the structure looks is anything above 67.95, and I keep the small credit. Between the prices of 67.90 and 67.65, I make $500 for this Condor plus the small credit of 35, and you can subtract commission, so let's say around 530. I no longer have this negative $410 trough at 67.60. That would, if the market pinned there, I would still make the minimum of $35. And if the market retraced and it retraced beyond 67.55 and it closed below that level, I again max out at 535 minus commissions. So I started with a butterfly, or I started with a short vertical put spread. I added on another put spread that I bought to turn this into a short butterfly. And from that point on, I bought another put spread, 30 handles higher from the initial spread that I sold, leaving me with a condor here. And then I have this long put spread between 60 and double. So I have a nice wide profit tent, which would be more beneficial to me in a volatile market. So when the market's swinging to the upside, swinging to the downside, I would have a better chance of this closing for max profit, or wiggling out of this current position for a profit less than max, still something decent given the position size. Remember, this was a simple one lot vertical spread to begin with, and then I started adding, I added on to it to morph it into a short butterfly, morph it into a condor, plus a vertical spread, another vertical spread to the downside on the outer wings. This kind of thing, as I said, works much better in a volatile market, which it doesn't look like we're going to get today. However, there's still a little more than 3 hours left, and anything that comes out of Washington or anything banking related that's perceived as negative news by the market will give this setup a chance to possibly max out in here or below 67 double. Whether or not that's going to happen, I don't know. At this point, the odds are not favoring that, clearly. But again, as I said, you never know. We start to go back into unchanged territory or negative territory, then this setup is going to begin to look much, much better. We will see. Not expecting it, but it's nice to know that if the market does retrace and go back down, there's a decent profit to be made. All right, that's going to be it for today. Thanks for watching. I'll catch you guys next time.